So is your credit holding you back from stepping into the home you've always wanted? I will unravel the common credit myths that can derail your homeownership dreams and equip you with the truth to make an informed decision. Hi, I'm Eric Newman. In my 30 plus years working in the housing industry, I've helped thousands of people like you achieve the dream of homeownership. So let's talk about the misconceptions. The first one is that checking your credit is going to hurt your score. And that's actually not true. Credit inquiries are only 5% of what actually goes into the mortgage FICO model. Multiple inquiries for the same purpose only count as one inquiry. Online credit sources such as Credit Karma use entirely different algorithms than the FICO model, so don't trust them when you're wanting to get a home loan. The only time a credit check will have a negative impact is if you have a ton of inquiry in a small period of time. For example, Christmas season, opening up credit cards to save a few dollars at the department stores. I wouldn't advise doing that if you plan to buy a home soon. So when you are applying for a home purchase, we can't guess what your score is. We do have to check your credit. We need the actual facts. Now, misconception number 2 is that people think that they have to have a perfect credit score because they've made all their payments on time. Payment history does matter. However, how much is borrowed on revolving debt like credit cards versus what the credit limit is matters a lot more. So the higher usage of your revolving debt, it'll have a negative impact, and also vice versa. So recommendation is to keep your balance at the time that the vendor reports to the credit bureaus, which is going to be once a month. Keep your balance under 20% of your credit limit to have a positive effect on your credit score. So this matters almost more than payment history. And an example was a client of ours that had never missed a payment in 20 years. He was fantastic at paying his bills on time, but he maxed out his credit cards and he had a credit score as a result in the 600s. This was going to affect his qualifications and his rate and term. He had the cash to pay his cards off, but we advised that he leave a small balance on one of the cards. By doing this, we helped him raise his credit score by 58 points in under 2 weeks. So the higher the credit score, the better the rate. Misconception number 3 is that you can't buy a home because you think your credit score is too low, like in the 500s or 600s. And that's just simply not true. You can buy a home with a lower score, but it depends on why the score is where it is. For example, if you've had a bankruptcy in the past or some collections, or if the reason is that you've maxed out the credit cards, it's not necessarily a problem. Bankruptcies in the past, we just have to figure out when it happened and how long you need to wait, maybe a few years, to be able to purchase a home from the time it was discharged. Collections, again, it depends on the time frame and the amount of the collection amount due. So once you pass any required waiting periods, even if your score is still down there, it's okay. It's best to have us review. We'll determine what can be done to clean up your credit and possibly raise your score. So we had a client recently, she had a 589 credit score and was able to literally buy a house with nothing down. So even if you have a score under 600, there are assistance programs to help you. So don't rule yourself out of buying a home just because you think your score's not good enough. It's going to make a huge difference for you to get out of paying rent and get into a home that you can own and gain equity on. So are you ready to take that leap to purchase your first home? Be sure to subscribe to our channel for more great videos and tips on buying a home. Our website link is also down below in the description. Check it out and we'll see you there.